Right, so today is the first October. I don't know if I can show the date, but today is the first of October, and you can see this is the first day of October here on this calendar. If you see this time frame here, it's still loading, but I want you to see something. So today being first of October, I already kind of have an idea of where and what I'm expecting on Euro USD. So I'm expecting a drop on price action for real, a real drop. So using the CRC entry model method, I know I'm expecting price to trade bearish this month. Like the whole of October should be bearish. Now this is a monthly candle time frame. You can see what's happening around this level here, around this level. So my candlesticks is actually fluctuating. If not, you'll see. I can take you to trading view. So here on trading view, let me take you to the monthly time frame. Yeah, you see here liquidity was being taken out from this high here, and the previous month, which was September, this bullish candlestick here. If you look at it here, okay, let me just use a new chart. So let's go. So here on the monthly time frame, this is what happened here. Okay, liquidity was being taken from this previous month high, this one here, and you can see that this September candlestick here, September candlestick gave a rejection and it closed below this level. So we are expecting lower prices from here because that is more like a sweep of liquidity, because this one actually closed below. You can see the total rejection here. So you're expecting a drop in price action at most for 2 months. For 2 months. No, knowing this, eh, what I'll be looking for in the market is more like a sell. And where is my monthly target for October? At most the low of September. That's where the next liquidity should be. So my monthly target is going to be this low. So this is where I'm actually going to be looking for entries. This is where I'll be looking for entries. So from this level down to this level, I'll be looking for entries to sell this market. Now let's go to the weekly time frame. On the weekly time frame, let's see what we have here. Okay. Now on the weekly time frame, you can see a lot of price movement here, but this one is quite certain. You can see how price have been trying to buy around there, more like a consolidating area. So the weekly time frame looks bullish, but if you look around this area, we must have had a shift in market structure around this area where this bearish candlestick is actually very big, bigger than all these bullish candlesticks. So I feel like a drop is around to happen. And remember, this is my target, this low here. So we are not really aiming that much. So this is more like my potential target. And you can see this is a sweep of liquidity, a big rejection, and I expect price to continue in this bearish mood, because the bearish candle actually closed below this bullish candlestick after taking out the liquidity, which is actually very more like a good signal to actually continue bearish, just like what happened here when liquidity was being taken out from here. Liquidity was being taken out from this high, and you can see when this bearish candlestick actually closed below here, let's say this level now. You see this candle took out this high here, and this one did not really close below, so it was not certain. But as soon as this bearish candlestick closed below this candle body here, we were sure that we were going to go down. Maybe the next 2 months was going to go down, because this has given you more like a shift in market structure. It closed below the bearish price or the bullish price here. So from this candle, you'll be sure that price will be going down. So that's what I'm just trying to explain in this level here. That because this one has closed below here after the sweep of liquidity, because this one has closed below this very candle that took out liquidity, then we might actually have a drop of price, just like this one now. It's closed below. It's just a simple logic. It doesn't really work all the time, but technically most of them do play out, just like as I've shown you around this previous candlestick. So it's not really proven, but I do use it to also know my stand in the market. So I'm expecting more of a bearish prices down to this low, especially this low. So let's go to the daily time frame. one time frame down. So this is more like doing like a top down analysis for the month and knowing my target already for the month. Now on the daily time frame, I have something very interesting in this level here. If you look at it, it's more like a CRT entry model, but you don't really have to tag everything to CRT entry model. So on the daily time frame, this is a fair value gap, a bearish fair value gap that price is reacting from. So that's a fair value gap, and this is just liquidity. Then what else? We have this to be a break of structure or a shift in market structure. Price taking out this low is a shift in market structure. If you don't really know how to see it now, you see it on the 4 hours time frame. This is a shift in market structure for me, but it's not visible because you may not really know. But if you go to the 4 hour time frame, you'll see that the shift in market structure is visible. So that brings us to 4 hour time frame. So on the 4 hour time frame, you see the imbalance here. This is a shift in market structure. So I've been willing to take price from here. I'll show you that on my other charts. I tried selling from a particular level, but this has always been my point of interest. Yeah, so this is it here. You can use this to be point of interest, but price will not come to mitigate it. Just the daily fair value gap, which is quite below here, and that's what really matters because the daily time frame is actually stronger. Now, another thing I like about this price action is the fact that liquidity is really swept, or liquidity was above here. You can see all these old highs here, where liquidity that was being taken out. These old highs here, liquidity that was taken out here. So on the 4 hours, that's showing you a sweep of liquidity. And I'm also liking this formation here, where this can actually be a potential shift in market structure to the downside in order to continue bearish. This can actually be a potential shift in market structure, but you will not see it because here you're on the 4 hours, which would also take us to the 1 hour time frame. Now in the 1 hour time frame, that is our shift in market structure. Very beautiful. Our shift in market structure is visible, and this is the fair value gap price is actually reacting from the 1 hour time frame after reacting from another point of interest on the daily time frame. So for a reason, oh, what just happened? For a reason, I think we are on the safer side unless there is a news that just made this price pumped. Yeah, unless there is a news that just made this price pumped, I will have to check the fundamentals again. But still and still, let's continue the analysis. So this is it, a shift in market structure, and what else are we looking at to take a trade? Which would now go down to the 15-minute time frame. Okay, 15-minute time frame. This should be a news intake here. A news just really happened. Okay, this should be a news. I should have checked my fundamentals before I enter the trade, but let's just see. I don't expect price to go above this level. I'm still very bearish here. On the 50 minutes, okay, this is the 15 minute. This is the shift in market structure, and yes, unless there's a news intake that's making price give us this sharp move, I can not really see that we are bullish. So let's see how it's going to go. But everything was looking very okay before this full pump came in here. And if you check on the 1 minute, it's just one candlestick. See, so I feel like there's a news intake here. That's more like a notification. Okay, USD. This is the news intake here. This pump came in from this news here. So we now have to wait for price to correct himself again. But everything was just looking good. So that's the thing with fundamentals. It will just change everything within a twinkle of an eye. But let's just see. Maybe tomorrow we might get a good sell entry for price. So right after the first loss I took, I was able to find another entry right inside the point of interest, which is the fair value gap here from 1 minute time frame. Let me show you. So I saw this as a potential inducement level, after which price did not really hold here. Let me zoom in now. Let me see. This was when I first took this entry before the news. There was a shift in market structure here, which I saw, and I was awaiting also, but I entered. But yeah, we got the shift in market structure before this whole news came in. It took me out. It was a very small risk, so it was not even up to 100p. So that was just a small risk there. I wanted to, risk down to this level. We look at it about let's see. about 1 is to 14, and there also I took another entry right at the peak of this level here because I was monitoring it from the 15 minutes. So I knew that if the 15 minutes closed bearish at this level here, then is a sweep of liquidity. And I also had this whole thing happening inside my area of context, or should I call it point of interest, which is the daily fair value gap. Yeah, so that was it for me. Then I also show you when I had a confirmation that this market was going to sell completely from that level on the 1 minute. I drew out my shifting market structure. Mostly I was using the MT5 to do all the check-ins and everything. So that's it. I don't know how this trade is going to play out, but we've done our part to execute. So all we just have to do is to wait. So let me show you what this trade looks like here and how it's going on the MT5. So this is it here on the MT5. I show you from the 1 minute when I first took that trade here. It was around this level after the sweep of liquidity there, this inducement. Then this was when I was looking for a good this was a market structure shift, the first one. So it was not really looking that good from here. This was not looking that good. This shift in market structure was not looking that good because there was no momentum below it. So it was really not too certain for me here. So this was when price took a better turn when we traded. I think it was not even here. This was looking like a um liquidity sweep also. It was not that certain until price came back to this level here. This was when everything became certain. So even if you were to enter late, the latest you could have entered would have been this fair value gap here on the 1 minute, because this was where price gave the real sweeping market structure, shifting market structure. This one wasn't that good for me. If you see, that was why I drew this low to be like a kind of liquidity level. I was really watching this trade closely. This was not a real shift in market structure. This is the real shift in market structure. It traded below the last low, closed below it, then retreating to this point of interest fair value gap. So the most efficient trade entry, or the better trade entry with a lower risk, would have just been this one. You enter from here, stop loss right above this high, because that's the last high you'll be looking out for, and it's just slightly 100 pips. Yeah, so that's it. So with that, you could do you would have done 1 is to 3 by now. 1 is to 3 and you're off the market. But like I said, I'm aiming for something much. Yeah, so let's see how this market goes. So it's not looking that good again. Let's see how it goes. Okay, more like price is going to reject from here. So let me just break even, because price is not supposed to really come back above here. Let me just break even. Set my break even to this level. So that's it. So let's see what will happen, guys. Let's really see. Then this one stop loss should be slightly above here. So now this trade is actually risk free. So that's it here. I'm expecting a drop down to this low. I'm expecting a drop down, seriously. There's no reason. These are all liquidities I want to see price come and take. Liquidity 1, liquidity 2. I don't really see any force holding this price, or I don't really see any opposing PDRA around that level. So it's supposed to be like a free fall for me. I don't know, sure. But let's just see what price is gonna do. But for now, we are in profit, serious profit. So that will be all. Maybe tomorrow I will come and update you on how the trade is going. So this is where I use for the analysis. So let me show you how would I have been able to profit from my point of interest, or my point of interest down to this level. So because I was saying that before price will hit our overall targets, price will give us entries, series of entries to actually trade down to our overall target. This target is the monthly low, which is our overall target. Yeah, previous month's low, and you can see what happened. Price has almost gotten to the target, or is close to the target. So already before price must have gotten down to this target, that's giving us more like 3 point of interest, like 3 entry models, which I'll be sharing with you already. And I don't know if price will still dish out more entry models before it hits this point of interest, but for me, I would stop trading if price hits this level of interest. So this is my target, and if price should hit my monthly target, then I will stop looking for entries. That will be like the last level I want to look for any entries. So let's go to 1 hour, which is more like the entry time frame I used to look out for entries. Meanwhile, the price is actually doing well. Price have actually done well, yeah. On the other side of the chart I used to analyze, more like we've gotten to our target, more like I've gotten to my daily target already. So price is actually doing well on this other side here of the market where I did the analysis. So this one is just me showing you how price gave out three good entry models or three opportunities before. This is it here. This is where I had to be my first target. But we have a daily, we have the overall monthly target. So let me go back to the other chart where I used to do the overall top down analysis here on Euro USD. So now if I'm coming back to this overall chart, I want to show you where it would have been a very good place for entry or good entry model. So like I said, like I said earlier on that first I entered again around this level, which you can see here on this Euro USD. My first entry here on the 15 minute Euro USD. It was on the 15 minute when I entered after the first inducement was taken out here. So I entered after this first inducement was taken out. Very good entry. I wanted to sell down to this level, which was my overall target, but this retracement did not allow me to stay long in the market. I had to close because price was actually retracing here. So let's go back to the other place. That was like my first entry. So my second entry, or the second entry price gave, was this one. Let me look at the 1 hour time frame here. So after that first entry, the second entry price gave was this one. After price created a break of structure here, to be sure that we are now bearish, price created a break of structure here. So what you'll be looking out for is mostly this fair value gap right here. Yes, this was the fair value gap I was looking for. I was looking out to see price come back to the first time. So if you should go back to this level here on the 5 minutes, let's go as low as 5 minutes. That's where I find my entry confirmation. So as low as 5 minutes, what do we have in that fair value gap here? That was like the second entry opportunity I saw. So if I should zoom in, you can see how the price action is here. So even if I have entered after, where did we have a shift in market structure? So when price first came into the fair value gap, there was no shift in market structure. So this was where we had the shift in market structure. Yeah. So let me draw it out. So this is where we had the shift in market structure around this level here. And this was during, look at the time here as I'm moving this. So this was actually on the around 5 o'clock, early hours of the day. Let's just see. I saw the shift in market structure and I entered after the retracement. This retracement here, this retracement, I entered after this retracement, and seeing this price taking out liquidity above here. Let's just say I entered, assuming I entered. What will be my stop loss short position, because I was actually shorting. So stop loss would have been slightly above here because I've seen price taking out liquidity from this level. I've seen price taking out liquidity from this level. This is the first entry model. I was looking at this FVG, so I've seen price taking out liquidity from that level, and this would have been like a little bit gap for price to take out liquidity. So I would have entered from here, although I set a limit order, and yes, I lost that limit order because I was not going to be in the market. Like I said, this was during the prediction session, so I also target this low. So this one did 1:1, and did 1:1, and it went to stop loss from here. Yes, did 1:1 and went to stop loss. So that was the first opportunity I saw on price here, the 1 hour fair value gap, which did not work. So that would have been like a loss, a loss there. So that would be the first loss here. So let me check out for the second opportunity I also saw. Second opportunity came in around this level here. and it was on Friday. So I mostly don't trade on Friday, but I'm just telling you, just in case you do trade on Friday, this would have also been another level of liquidity. Then you would have just been looking out for this level as your inducement, just like I entered around this first level. Same thing with the first entry I had. So this would have been an inducement, and what you'll be looking out for around this zone after price has taken out liquidity would be a shift in market structure before you can enter. So let's see on the 5 minutes, that will be the second opportunity. So on the 5 minutes here, you want to see a shift in market structure, and for all I've seen here, this is where I'm already shifting market structure just before the close of the day. So if you've seen this like this as your shift in market structure, then maybe you enter around here after this retracement here, you start shorting around here, and maybe your stop loss will just be slightly above here, just in case this was to be a just in case this will be any form of liquidity, maybe inducement, you just leave this margin a little bit, enter around there, then still target the level here overall level here and you can see how price opened on Monday, the new week opening gap. So this would have been a good trade, but I was not in the market on Friday. So yeah, that one actually, so you target this low, and this would have been a good trade about how many, let's see. So for people that entered on Friday, they were opportune to catch this whole trade here. So from here to here was actually 550 pips. So for Monday, just in case you did not enter on Friday, what would we really have here? But there's something I know about new week opening gap here, that price will always come back to fill the new week opening gap and continue in that direction. So me on Monday, I would have used this to be a potential point of interest. So if you look on the 1 hour, if the gap is visible, that would be my next point of interest, because this is also like a fair value gap for me. The new week opening gap is also like a fair value gap for me. So that would have been my potential point of interest. Then I'll also want to enter when I see shift in market structure. So that's more like the new week opening gap strategy or entry model. So let's see, we will have a confirmation there. That would have been the right time to enter, like from this week, if you did not really trade on Friday. I'm saying about the new week opening gap. So imagine you met price around here trying to fill up this gap. So this is it here. This demarcation is showing you the Friday ending and Monday opening. So this would have been a bonus entry for those on Monday that were awake during the Asian session. Is depending on the time frame. Can you really be awake during those times here? So if you've seen this, for me, I would really execute this instantly without any fear. I know I don't trade during the Asian session, but me seeing a retracement back into a new week opening gap and a confirmation, I would execute this trade. And this trade is like about how many pips now? See, about 600 to 700 pips. 700 pips. So price also give a second entry here, or a second opportunity here on Monday. So this was actually the ideal opportunity here on Monday. If you also look here, retracement came in. You could also join after this retracement, a break of structure. You could also join after this retracement, a break of structure. You could also catch this one if you were fast enough, but the ideal opportunity for me would have been this one, but it happened too early. So let's check out the third opportunity. So the third opportunity would have been this breaker block, sorry, mitigation block, right? If I'm not wrong. What is this block? Let me try to draw it again. I'm missing something out. So this is a mitigation block. Yes. So that's the mitigation block, where price is actually mitigating the last order block that was taken out here. So the next opportunity was this mitigation block. So when price gets to this mitigation block, you want to start looking for confirmations in order to start selling. So this is the third and most valid opportunity that price also gave here. So let's see, if you don't use your limit order, let's look for confirmations, and let's see how we would have been able to enter the street. So we go to 5 minutes. What do we have on 5 minutes? Do we have any confirmation around the mitigation block? So here on the mitigation block, this was where we had the confirmation for me. This is where I was seeing the confirmation here. Well, this was where I've called it a entry for me at this break here where price created a shift market structure, and maybe I would have just taken the trade from here and stop loss slightly above here. And yes, where would I actually aim? I will be aiming this low. So this is actually 1:6 for me, and this was also a good level to sell from also. So if you check it out here, the first initial level price gave was this one, and during the course of the analysis price took this one also. The first entry I had was this one, and you saw me how I took this entry with you guys here. I also made profit of it from the market. And the second ideal trade was actually going to be this fair value gap here, but I took a loss, also a very little loss, because price just did 1:1, and yeah, price did not really work out very well on that level for me, just like as I thought. And the third one would have also been inducement here this inducement here, and this is where price actually confirmed the shift in market structure. But I did not enter because on Friday I don't normally take trades. But the third one, okay, first, second, on Friday was the third one. So Monday was the fourth entry model. Using the entry models I know, this was the new week opening gap entry model, NWOG, work, stuff like that. So there's this one. All these things are mostly happening during the Asian session, and it's not that easy for us. And this one also, which is the fifth one, was the mitigation block where price actually traded through, and it also happened during the Asian section. So just imagine if you were awake during this Asian section, and this also Asian section, you would have been able to spot out three opportunities and take trades from them. It was only this one that happened during the closing of Friday, which is not really a good time to trade. Also, I would not really advise anybody to trade at the end of Friday. So price actually gave out three good opportunities: one, two, and three. This one was actually invalid because price came to seek liquidity here. So that is it for me. I was able to only see this one and this one. So it was only these two I saw. This one wasn't really happening in an ideal time frame for me because Asian session is more like our resting time here. So that will be on Euro USD, and we are almost at our targets. This is our overall target here. If you look at it from the 1 hour, we've not gone to our target. So I'm still expecting price to still give out maybe two more entry models before reaching the overall target. But as for me, I'm already okay right here. So that will be all on this video. Do not to like, share, comment, and also subscribe to get more videos. So just by knowing your target, you've been able to get a full directional bias, daily bias on how to trade this pair. So that's just it here. Ask questions where you do not. Okay, so today is 8th of October, and price has gotten to our monthly targets, guys, on Euro USD. So this is our monthly target, like I told you, that I'm expecting price to take out the low of the previous month on Euro USD, and you can see how price has done that already here. Price has actually gotten to our monthly targets. Yesterday on the 7th, I was showing you how price gave us three opportunity, and after making that video, guys, I saw another opportunity that I wanted to trade from, but I will show you here. It was not really good for me, so I had to trade or reanalyze at the correlating pair. The correlating pair of Euro USD is GBP USD, USD, and the rest of them. So because Euro USD was not really giving me that clear move, I had to analyze on GBP USD, and I got an entry. So let me show you where I found price yesterday. So you see, this is where the 7th stopped around here. So I made price around this level here. When I was making that video, I made price around this level here. So if you see, I made price around here. So this was the liquidity I was looking out for. That I went to see price sweep before price come back to monthly liquidity here. So when I made that video, price was around here. around this level. Yeah. So it was just a really small target from this level to this liquidity. It was a small target for me. So I know that price was actually going to give an entry from this level to this level, which it did. Yeah, it did from this level. Yeah, this is an entry from here to this low, and there was an entry here also, but it was not what I needed to trade, or it was not very sure for me because let me show you something. On the 4 hours, what do we have there? On the 4 hours, this is what we have here. Yes, on the 4 hours, I saw this fair value gap here around this level. So this is a good fair value gap formation that price did there. So I did not want to trade Euro USD because this was my first target and it was really close. Price was really close to the target. Looking at this retracement from this level down to this target. So before I even get any entry confirmation, price must have gotten to this initial target, and which is this liquidity, and I might not really be happy with price again because if I cannot enter before this first target, I might not really have a good opportunity or a good shot at this level, or a good shot at any good entry around this level before reaching here. That's to my own understanding. Like, you're supposed to find a trade entry around the area of interest. Like, you check it out here. That's 40 hours. If you go to 1 minute, if I was still dwelling on Euro USD, I might not really have a good entry confirmation around that level there before the liquidity. That's first liquidity. So let me show you what I mean. This is it here. That's this is where we have a shift in market structure. So that is where we have a shift. So this is where the shift in market structure came in, and if I'm to take it, this is about how many pips here from the first target here, about 118 pips. So I was not really okay with this move, so I had to check the other pair, the correlating pair, which is GBP USD. So I was seeing 118 pips here, so I was not really okay with the trade. But if I have actually wanted to hold to the overall target, which was this other low, I was not certain that I will not be stopped out. Like, I was not too sure about price action, but from here we had about 600 pips from that level of interest down to the overall monthly target. We had up to 600 pips, but the initial target, which was this one here, was actually 180 pips, and I'm not very sure that I'll be able to hold this trade from this level here down to this level. So I knew that I might not be really sure about holding that trade from that level now. From this, I knew that I might not be sure of holding this trade from here down to here. Highest I wanted to trade was from that level to this low. So I did not enter this trade. Highest I went to. So I then went to look for a. I went to the other correlating pair, which is GBP USD. Let me show you GBP USD. Now this is GBP USD, same setup, same trade, but different pips. Now if you look at here, how many pips did I make from this level? I made about 400 pips, and if you look at Euro USD was actually 180 pips. See, this one actually had 450 pips, and if you look at it, it was actually the same thing. More like, it's just that GBP USD had enough price action to do to actually cover up to the liquidity I was looking out for. Meanwhile, Euro USD has already traded closer to the liquidity. So if you look at GBP USD, um Same entry model, which is the fair value gap entry model. This is the mitigation, fair value gap mitigation here. After the fair value gap, I was just very quick at the trade. I entered it at that ending of the day. So I entered the trade at the end of yesterday on the 7th. If we look at, this is it here. I entered it around 10 o'clock, almost 10 o'clock. Okay, this is actually 9 o'clock or 8 o'clock before the end of the day. So I was just very certain because I had the confirmation. So I just entered the trade at the end of the day. Because in my previous video, I told you how I missed this Euro USD setup because it was at the end of the day also, and I did not trade it. So if you look at Euro USD here, because of that experience, I had to execute GBP USD. So I missed this trade opportunity, the breakout block here. I missed this one too because it was at the end of the day. We look at price retraced to this breaker block here. This is a breaker block, and if you look at here at the end of the day also, see this is on the 6th here, 6 here. Then this is where 7 started from, and from here down to here, price did about 600 pips before the end of London session. So I missed it because I told myself I was not going to trade Asian session, and I will not take any trade at the end of New York session, which is like 8 p.m. in West African time. So that was why I missed this range. So yesterday I entered that one because I missed this one at that time, and it was also a good trade. So now I've more like changed my rules to trading when it's short or when it's good, not minding the time. So that's what happened on GBP USD. So I executed this one and I got to take profit. And this one happened during New York session, but I was not around. So price came here to inducement after we hit the first target here. We retraced back to take out this liquidity, filling up this 1 hour FVG. This 1 hour FVG, you can see price filled up the 1 hour FVG and dropped down. So for Euro USD, guys, I'm done for Euro USD. Like, this is where we did our analysis from, and this is how we got to the target right from our point of interest, down to our target. So from our point of interest to our target, we had about how many pips? You look at from here, from point of interest down to this level here was about 1,600 and okay 165 pips. Meanwhile, okay, 1,652 pips, which is about